Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings. And today we're looking at Melar Acquisition Corp. Which seems to be setting the stage for a big event. And let's just say some developments are a bit acquisitive, so buckle up. Because we're diving into a report that hints at a significant business combination, and it looks like they're lining up some important financial pieces. If you appreciate getting straight insights from corporate documents like this, make sure you are subscribed. We also have a Discord community linked in the description below where we discuss these filings in more detail. Right off the bat, we see Melar Acquisition Corp., a company incorporated in the Cayman Islands. It is a special purpose acquisition company, or SPAC, which means its main job is to raise money through an initial public offering to buy another company. Today we're looking at an event that happened on the 21st of October, 2025. Which seems to be a key date for some financing arrangements. Here is a really interesting part. On the 21st of October 2025, Everly Global Inc., the company they are looking to combine with, entered into a note agreement with Melar Capital Group LLC. This is a big chunk of money, $7.5 million. Now what's really intriguing is the 14-day original issue discount, which is $750,000. Think of it like this. For every $100 they borrow, they only get $90 up front, with the rest being a fee. This means the effective borrowing cost is higher from the get. This note is also bearing interest at a rather high rate of 17.5% per year, and it's secured by Everly's assets. This is important because it means if Everly can't pay it back, Melar Capital Group has a claim on their stuff. And who is Melar Capital Group? Well, it's an affiliate of the sponsor, which is Melar Acquisition Sponsor. ILAC, this connection is significant because it suggests a related party transaction, something we always look closely at in these filings. This loan is due in 12 months. That's a pretty short fuse, especially for a company that's about to go through a major business combination. It adds a layer of urgency to get this deal finalized and Everly's operations stable. But to raise a twist, this isn't just a straight loan. Maxi G, the lender, has the option to convert the outstanding balance into shares of Melar's class, a common stock once the business combination is complete. This gives the lender a way to benefit if Melar's stock price goes up. It's a way to potentially hedge their bet, and it could mean more shares issued by Melar down the line, which could dilute existing shareholders. Now, the report states that this Everly convertible note doesn't create a direct financial obligation for Melar itself or an off-balance sheet arrangement. This is a bit of legal phrasing. While Melar isn't directly on the hook for the debt, they are a signatory to the note acknowledging the conversion right and a security interest. This means Melar is definitely involved, and if things go wrong with Everly's ability to repay or convert, it could still impact Melar indirectly through the business combination. This whole situation is tied to a bigger picture, a business combination with Everly Global Incorporated. This merger agreement was signed back in July of 2025, so this note and the financing around it is likely a way to keep Everly afloat and moving towards this big deal closing. And speaking of deadlines, things were getting tight. Apparently, there was a condition requiring Everly to secure at least $10 million in bridge financing by the 30th of September 2025. If they didn't, they could walk away from the whole deal. But on the 2nd of October, they pushed that deadline back to the 21st of October. The same day this new convertible note was signed. This suggests that the $7.5 million convertible note might be part of that larger $10 million bridge financing requirement. It highlights the constant dance of meeting conditions to keep a deal alive. We also see that Melar Acquisition Corp. Is units Class A ordinary shares, and warrants are all traded on the Nasdaq Stock Market LLC, which is a major stock exchange. This means there is public interest and scrutiny on their activities. One small detail here, they are an emerging growth company and have decided not to use the extended transition period for new or revised accounting standards. This means they'll be adopting new accounting rules sooner rather than later, which can sometimes impact how financial results are presented. Looking back a bit, Melar had already provided financing to Everly through an amended and restated secured promissory note. This was originally for up to $1.25 million, but it was later increased to $3.25 million. This shows a history of Melar supporting Everly financially, further underscoring the importance of this business combination for both parties. Similarly, the sponsor note, initially for $1.25 million, was also boosted to $3.25 million. This indicates that both the company and its main sponsor have been putting significant capital into the target company, Everly. The company is also reminding everyone that a significant registration statement, which includes a proxy statement and prospectus, will be filed. They're urging investors to read it carefully once it's available because it will contain crucial information about this business combination. This is standard procedure, but it signals that a shareholder vote is coming. And that's the ultimate hurdle to get this deal done. Now, like most corporate filings, this report is full of forward-looking statements. These are essentially educated guesses about the future. They're talking about plans, objectives, strategies, and future events. But they also include a big disclaimer that the actual results might be very different. This is their way of protecting themselves legally, saying, we're saying what we hope will happen, but we can't guarantee it. And they list out a bunch of risks that could derail things. For example, any event that could lead to the termination of the merger agreement itself. That's a pretty big catch-all. They also mention the possibility of legal proceedings after the announcement, and the inability to get regulatory approvals or shareholder nods for the deal. Another key risk is not being able to keep their shares listed on the Nasdaq after the merger. For a SPAC, a successful listing is pretty much the entire point, so this is a major concern. And finally, a really crucial one for any business, especially one undergoing a merger, they might not be able to raise the money they need. This includes the money needed for the business combination itself, and also any extra capital Everlie might require to keep its day-to-day operations running smoothly after the deal. If they can't get that funding, it could be game over. So, what's my take on all of this? Melar Acquisition Corp is clearly pushing hard to get its business combination with Everlie Global Inc. across the finish line. The recent convertible note from Melar Capital Group is a significant move, likely a piece of the puzzle to meet bridge financing requirements and keep the deal on track. The high interest rate and conversion option on this note are points to watch, as they could impact future shareholder value. The company is essentially buying time and potentially securing its target, but the reliance on this bridge financing and the potential for dilution from that convertible note present notable risks. It feels like Melar is deeply invested in making this deal happen, but Everlie also needs to demonstrate it can stand on its own 2 feet post. Merger, especially with those looming debt repayment and future financing needs. The key takeaway here is that while the merger itself is not a done deal, the financing structures being put in place are critical pieces of the puzzle, and investors need to pay close attention to how these financial instruments play out, particularly regarding potential dilution and Everlie's financial stability. Alright, that is our breakdown of Melar Acquisition Corp. As latest filing, what is your take on these financing maneuvers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.